Madanagopal Ramu, fund manager from Sundaram Alternate Assets, is joining us now. Madan, good afternoon. Thank you so much for your time. Let's start our chat on that note of the recovery. One section of the market believes that market is gone ahead of themselves and valuations are not very supportive, slight bubble zone, perhaps froth in certain areas, while others believe that the quality of superior growth and earnings will provide cushion to any fall which will happen. Which side of the market are you on?
Hi, Ajay. Good afternoon. Thanks for having us here. I think markets will be positively biased. We particularly feel that with the noise around rate cuts coming from Fed and India growth story continuing, I think Indian markets are positively biased. Sectorally, the participation can dramatically change compared to 2023 in 2024. But I think market will still positively biased towards delivering a high single digit or low double digit sort of a return in 2024.
Right. What about valuations? So what kind of numbers are we talking about on terms of earnings growth, large cap as well as the small cap universe?
If you look at the performance in 2023, large caps delivered around 15%, while mid and small caps around 40% in the last 1 year. But if you break the construct of the market, it is pretty interesting. If you look at PSUs as a pack has delivered almost 70% return. Capital goods supported by private capex and government spending being a pre-election year has delivered a 50% sort of a return to the investors. And this is a period where you had macros being very negative for consumption because of increasing interest rate and concerns of slow growth due to high inflation as well. Getting into 2024, we are seeing a dramatic change in this. Therefore, we feel that valuations are very comfortable in space like financials in consumption. And now that the rate cut noise are being coming in, I think investors will make money by getting into sectors like financials and consumption, particularly within consumptions, consumer discretionary, building products, and all these areas look interesting. And within financials, NBFCs look pretty interesting to us, both from valuation as well as from earnings perspective.
In fact, Nandan, I do remember last time too you spoke briefly about NBFCs and they did very well. The entire pack, the MFI space, the NBFCs have rebounded. So what kind of growth are you seeing? Is asset quality pressure, the nervousness in certain sections of the market regarding that is not justified? Valuations okay, growth is sustainable in NBFCs? If you could scratch that point a little more.
NBFC rate cut plus sustaining India growth momentum is the very good narrative, right? On one side, you are going to see margin benefiting when the rate cut starts. Obviously, it might take some time, probably start from the second half of this year. But that is a good positive development from a margin perspective. On the other side, growth being strong, India growth story continuing. Your concerns on a widespread sort of NPA cycle increasing probably in second half, that may not be case. So a good growth scenario and in addition to it, a rate cut scenario is a very ideal situation for NBFCs to outperform and continue this outperformance which they had in the last year also, in our opinion.
Madan, what are your thoughts on chemicals? They've started moving last 2-3 days at least. Completely bombed out space. At one point in time, very darling of the market. Are there early signs of bottoming out of inventory issues, pricing, etc. in chemicals?
Not yet, but if you look at in chemicals, there are two spaces. One is basic chemicals and another is specialty chemicals. If we look at the specialty chemical space, companies that we are invested into, they are talking about continuing with the capex and they are not postponing it. Neither they are hearing it from their from the companies that they are working with. So I feel that's a structural story, and with a short blip that we saw in 2023, 2024 should be a good rebound year. Basic chemicals got impacted because of the China dumping as well, in addition to the agro destocking that happened. That might take a little bit more time and depends on how China comes back. So that's something which you need to wait and watch. But we feel that specialty chemical companies can make a bounce, come back in 2024 strongly because their capex is continuing. and the capex will convert into earnings next year and even in 2025 as well. Therefore, I think that space looks interesting within the chemical space.
Okay, so you do expect earnings to start improving by the end of 24, going into 25, right?
Should be it can differ from company to companies, but I think mostly the recovery should start from Q2 or maximum from H2 of 2024.
But then, what are your thoughts on pharma? If I look at select pharma companies which are India focused, the growth is completely different. Valuation also they are getting much higher. But increasingly, commentary from large pharma companies seem to be suggesting that things are improving in US. Would you incrementally buy them?
Our style of investment is to look at can we put into certain themes with a 3 to 4 year sort of a perspective and make a reasonable return of at least doubling your money in that period. From that perspective, we have always found pharma very tough to push hard because the earnings growth is maximum going to be between 10 to 15%. There could be some one-off drugs which can for a short period of time give a higher growth. But mostly the earnings growth will be between 10 to 15%, given a 5% minimum price erosion in US always happening. At best, in our opinion, pharma is a trade. You can actually play it when the things are off, and then when you see an earnings upgrade for 1 or 2 quarters due to pricing being better, then you will benefit. So it's a 15% trade sort of a sector, not really a structural change that we see at this point of time in that space.
Madan, so on that filter of yours, that companies or themes which can double their earnings in 3 to 4 year period, what are the new themes which are coming in that filter, or recently in the last few months have you analyzed?
The themes continue to be same, but actually these have not participated in 2023. But we feel that in 2024 they will start participating in a big way. As I explained to you, financials, particularly NBFCs, they will continue to grow. They will see, and particularly if you play there is one particular portion of this financials where things are looking extremely attractive, which is conversion from informal lending to formal lending. So mid and small cap companies which are participating in this space, they are growing somewhere between 25 to 30% their loan book, and they got impacted a bit on the margin, but they managed that with growth. But now things improving on the margin side itself, getting into say H2 of 2024. I think that space looks extremely attractive. And anyone who gets in and say puts in money from a 3 to 4 year perspective should be able to see a reasonable return there. Consumer discretionary, as we said in the initial part of the commentary, got impacted last year due to concerns on growth slowing down and concerns of inflation impacting the overall consumption itself. So the overall package did not do well. But getting into 2024, we feel that base is sitting in, as well as rate cut comes in. Consumer financing also will be a major role to play. You will see that consumption picking up momentum. And inflation also much mellowed down right now compared to 2023. So therefore, all this put together, I think consumption as such can do well. Within that, I think consumer discretionary and particularly building products which have not done so well in 2023 can make a comeback, given that real estate has seen a good amount of demand in the last 6 months or so. So that's the space that we are looking at.
Last word, since you're speaking about consumption, I was just talking to Sapphire Foods management in my earlier show, and we all know what are happening in the management meet between Westlife recently, McDonald's franchisee, or even what's happening at Jubilant. The QSR space has got stuck. SSG is not growing, valuation not terribly cheap, but not very expensive either. But one was getting a sense, Sapphire just said that perhaps by March of next year onward, things will bottom out, etc. What are your thoughts on QSR in particular? No comments on specific name, but this entire QSR basket, which is a 3, 4, 5 names.
See, QSR is a long-term opportunity. If you look at in terms of number of stores, I took the name of Sapphire. If you look at the number of KFC stores in India, they are closer to somewhere like 600 stores. In China, the number of KFC stores are almost 8,000 stores. So what are we talking about? This is a long-term growth story here. But obviously, post-COVID, 2022 had a very good strong comeback. So that was in the base in 2023, and therefore SSG suffered a bit. Instead of growing at 5-6%, they grew at say 2-3%. But if you look at the store addition, a lot of stores added by both Devyani and Sapphire in KFC, it still continues. Therefore, that's a long-term story. I think once SSG comes back with the base kicking in from March, that's what I think the management was alluding to. I think and then entire market is going to look out for good consumption stories going forward. I think the QSRs, particularly these names mentioned by you, can do well. With respect to Jubilant, the issue is it's fairly penetrated at this point of time from a number of store perspective. So as against 600 store that I mentioned for KFC, Jubilant has already 1,600 stores in India. Probably the growth will be little lower, but still growing. It will have a 10% sort of a growth compared to say KFC growing at 20%. But still, that's a very good growth compared to FMCG companies in India, right? 10% store addition and say 4-5% SSG that can come through. Even Jubilant will have an space to grow. So I feel overall QSR got impacted in 2023 due to the high base of 2022. Getting into 2024 and with noise around inflation coming down and rate cuts, a positive outlook on consumption and the valuations. Importantly, if you look at some of these names, the valuations are at least 25% discount to where they were a year back. In case of Sapphire, it is trading at a significant discount also. So all this put together, I think the space should deliver, but it's about what stocks you pick and what kind of returns you can make. But overall consumption itself, the base will be very supportive getting into 2024.
Then excellent having you on the show today. Great discussion. Thank you so much for your time.